Hi, thanks for taking a look at this research. I hope you can hear me all right. The title of the paper, as you know, is Weekly Sentiment Analysis of the Euro, and it does include a literature review that I hope you're able to take a look at. I recommend taking a look at all the references and all of the previous literature that has been involved and written about in academia for sentiment analysis. Obviously, if you're not aware, I do have a primary concern with currency coverage. So I cover the Euro, USD, the US dollar against the Canadian, as well as the Euro against the British pound sterling. So I like to focus on these currencies, and I like to focus on the option sentiment indicator. So the first slide, you can get there. Major bullets for the XY plot. So of course I had to incorporate a version of data analysis. The data that I use is the S-Factor raw score within the social market analytics framework of their S-Factor scores. And it was actually able to show quite a good prediction of the daily movements of the euro. And like as you've seen before, I do show some very bold and haughty back testing charts, and you'll see that in the paper. But the XY plot, I think, is more relevant for our focus here. And the major question of the paper: can social media and sentiment data be included in a prediction model? Finally, the OSI option sentiment indicator works as an end-of-day indicator with a one-day lag. Here's the chart taking a look at the XY plot. So very moderate positive slope. And then I'd like to get to answering the question. These are the caveats. I'm going to just skip through this. Okay, so the main question. Answering the main question of the research paper. If you have the reference sheet, we have Zhang and company, who gave a very good account of social media data in its ability to predict stock price returns, and namely its ability to predict earnings surprises. So this is very exciting. Zhang and company in 2014 research titled Tweet Sentiments and Crowdsourced Earnings Estimates as Valuable Sources of Information Around Earnings Releases shows that they are very much proponents of, yes, social media and sentiment data are very much able to be included in a formidable stock prediction model. So they say absolutely yes. Haven't really introduced Coleman's research. He takes on a dissertation with his 2013 paper, Essays in Investor Sentiment, and he says essentially no. And to understand why he says no, it's very clear. The proxy for investor sentiment is different than what we may call sentiment, and is different from what I measure as market sentiment. So I'll get into that later. And then, of course, the Irish study, according to Alice and McCallig, they say yes, sentiment data can predict stock returns in the long run, not in the short run. The reason they say that the sentiment data is not able to predict stock returns in the short run is because stock sentiment is an effect of stock prices and not essentially a cause. So it's not an input. So taking a look at the flow chart and the initial major bullet point, sentiment affects stock prices. It does not. It does, but is not. There is not really an input. It doesn't have so much an input because it doesn't necessarily imply a wealth effect. In so much that it does, then yes. In the long run, they say yes, but not in the short run. So hopefully that makes a little bit of sense. But in summary, I would like to say that the option sentiment indicator, my foundational research, is not a momentum indicator. There's really no feedback loop. Every day is a new day. It's a noise trading indicator. And there are no assertions to theory. So in other words, options traders are not assumed to be rational. And that's kind of ironic. I laugh because there is a collective rationale within the markets. So I'll leave it at that. That's pretty much all I have.